So tax time doesn't have to be stressful. Here's my tips on how to manage tax season as a real estate investor. Is the number one thing is do not wait until last minute. Make sure that your finances are up to date all year round. You're not going to come, January of the following year. You're not going to remember the expenses that you paid in March, and you're going to be scrambling through your credit card statements and invoices to say, oh, what property was this for? Should this be capitalized? Should this be expensed? So that's my biggest tip is do not wait until the end of the year. Make sure you're staying on your finances either monthly or quarterly so that you're not scrambling. It's a very stressful time of the year if you don't stay ahead of things. My other tip for making sure tax season isn't stressful is having conversations with your tax CPA in advance. Tax CPAs get super busy around April or October, the extended deadline. So make sure you're having conversations with them when they're not busy so that they can really optimize your tax strategy. You want to have your books clean and ready to go throughout the year so that you can discuss with your tax CPA, hey, what strategy should I be implementing this year so that we can make even better decisions during the year so that I can optimize my tax strategy next year. So, having those productive conversations during time that tax CPA can actually have them. So here's a kind of a year-round checklist of how you should be managing your financials so that you are not super stressed come tax season. So I would say, January is when you need to be filing all your 1099s for all the contractors that you paid throughout the year. Somebody like a contractor, maybe somebody who does cleaning at one of your Airbnbs, pretty much any non-employee contractor that you're paying throughout the year that isn't a corporation needs a 1099 by January 31st. So then I would say in February, what you're focusing on is pulling together all of your statements that you need to send your tax CPA. This shouldn't be super overwhelming. If you've kept up your bookkeeping throughout the year, you'll be sending them a balance sheet, a P&L, list of any capital improvements that you made throughout the year. So really just pulling together all those documents and sending them over to your tax CPA in February. March, you're going to be working with your tax CPA, answering any questions they may have on the documents you sent over so that you can file on time in April. And then throughout the rest of the year, it's just a matter of staying on top of your bookkeeping, making sure you're looking at your financials every month so you understand what expenses went to. You can categorize everything properly and smoothly. And then come towards the end of the year or even the middle of the year, let's have a conversation with your tax CPA about, what can I do better this year so that I can optimize my tax strategy? Let me be proactive about this rather than waiting until tax season, a year later to be like, oh, I should have done that last. So having those productive conversations in, June through December can be really beneficial for your business.